Hello and welcome. Back in July, we published our Agri-Market Outlook, in which we expected that UK beef production would fall year on year in 2020. We also expected that trade flows would be dampened because of the pandemic. In reality, so far this year, we've seen cattle slaughter and beef production rise in comparison to 2019. Trade flows have been dampened, although more severely than we had anticipated. Let's take a look at what has happened in a bit more detail. In July, we forecast that UK prime cattle slaughter in 2020 overall would fall by 2% from last year to around 1.96 million head. This was based on several factors. Firstly, cattle population data showed that there were fewer prime animals on the ground close to slaughter age for the year. Latest UK population estimates since published by DEFRA support this, with fewer cattle recorded in all categories apart from females under 12 months. The forecast also factored in expectations of reduced domestic beef consumption, due in part to the COVID-19 pandemic limiting food service demand. We also expected export demand to be reduced, as COVID-19 caused similar supply chain problems in other countries. For the first 9 months of the year, UK prime cattle slaughter has totalled 1.52 million head, according to DEFRA figures, which is currently 3% above last year. It's worth noting that DEFRA have advised that their survey responses have been affected by the pandemic, which may influence how animals are split between groupings in the data. There are a few reasons that may explain the rise in prime slaughter. The switch in demand from out-of-home to in-home due to the pandemic will have affected demand for homegrown beef, which I'll explain a little more later. Strong cattle prices of late may have also encouraged more animals forwards. Reported average carcass weights would support this, having run slightly lighter than last year for the past few months. In addition, contraction in the suckler breeding herd has likely allowed heifer slaughter to remain elevated. Cow slaughter between January and September stood at 485,300 head, up 3% year on year. This has likely been due to a combination of strong prices and potentially increased culling by those dairy producers who have had to curb their milk production in response to the pandemic. Moving to trade. In July, we expected that UK beef imports and exports for the year overall would fall by 1% and 2% compared to 2019 respectively. This was in line with our expectations of lower consumption and lower production. Between January and August, trade data showed that imports were actually down 8% on last year. Exports for the same period were down 7%. It should be noted that these trade figures refer to volumes in carcass weight equivalent, which may differ from figures reported elsewhere. The drop in imports could be due to a number of reasons. One explanation could be to do with the different sources of beef sold via retail and food service that I mentioned earlier. Beef destined for retail in the UK is more likely to be home produced, whereas imported beef can often be destined for food service. Therefore, the shift from food service to retail due to the pandemic has likely driven demand for UK grown beef, but reduced import requirements. In addition, UK imports are heavily reliant on Irish production, which has been constrained somewhat this year. The larger fall in exports is likely due to the COVID-19 disrupting trade flows and demand in other countries, considering the increase in UK production. The increase in retail demand here may also have limited availability for export. Due to an anticipated fall in slaughter, lighter carcass weights and lower consumption, UK beef production for the year overall was forecast to fall 4%. So far, however, the latest DEFRA figures show that actual beef production between January and September was up 3% from the same period in 2019. So, what does this mean for the rest of the year? Looking ahead, cattle slaughter typically sees some uplift in the autumn in comparison to the rest of the year, as producers consider their winter housing costs and as processors look to secure supplies ahead of the typically busy Christmas period. It's likely that cattle slaughter and production will end the year higher than we anticipated back in July. However, uncertainty does remain over this in the short term, considering the lower cattle inventory, higher than expected slaughter so far this year, and of course how COVID-19 continues to be managed. At time of recording, increasingly stringent coronavirus measures are being implemented in various regions of the country to try and stem rising cases. Some areas are even heading back into so-called circuit breaker lockdowns, with similar restrictions to those of the national lockdown in March. How such restrictions might affect demand will be a key watch point going forwards, both domestically and for export. We'll be reviewing our forecasts in the new year. In the meantime, do check out our website for regular news and updates on cattle markets at ahdb.org.uk/beef.